I mean, like it's going to millions a coin, and it could be tens of millions a coin.
Today we interview Bitcoin billionaire and founder of MicroStrategy, Michael Saylor.
Capital flows to security. It flows to where it's treated the best.
As he shares his ultimate Bitcoin forecast for 2025 and beyond.
It's flowing into Bitcoin because it's running away from Russia, and it's running away from China, and it's running away from Africa, and it's running away from Venezuela and Cuba, and it's running away from South America. It's even running away from...
Watch today's whole video. Michael also reveals the biggest lie with quantum computing and Bitcoin.
You know, the entire Willow thing is a successful marketing stunt.
Also his never before heard prediction on the future of Ethereum and Solana.
The path is open for stablecoin, that to go from $150 billion to $1 trillion to $10 trillion.
Click the like button to support me. Let's start.
Just for all the new people that have entered crypto in this last year, that are going to enter crypto in this next year. I know Altcoin Daily, we've had hundreds of thousands of new subscribers just in this last year. For the new people, could you clearly explain how Bitcoin goes from 100K per coin today to 13 million per coin by 2045?
Well, we have to start with first principles. Bitcoin is the world's first perfect monetary asset. And by perfect, I mean hard capped at some fixed amount. Every other monetary asset you could use as a long-term store of value has some leakage or inflation in it, whether it's gold or silver or real estate or art or whatever it is. There's entropy, there's degradation. And so the ideal perfect monetary asset would be some fixed amount of something for the next 1,000 years or 10,000 years. And so Bitcoin's the first thing like that. Even things we think that are scarce, like real estate, we can make more real estate. We make more waterfront property even. Half of Boston and half of Miami Beach is man-made waterfront property. So you start with that idea of scarcity. So why does it go up in value? It goes up because the supply of dollars is increasing 7% a year for the past 100 years. And the supply of weak currencies is more like 14% a year. And that means the dollar loses 99.9% of its value over 100 years. A weak currency would lose, 99.9% of its value sometimes over 20 years. So the reason that the value of scarce, desirable stuff goes up is because it's difficult to manufacture with a factory. You ever go to Hershey's, Pennsylvania, you see a factory and they spit out candy bars, and they spit out candy bars at 50,000 an hour in a box, and you can't create 50,000 candy bars, but they did it very well. That's why they created a company. So if a factory can make it, the price is going down. If a politician can print it or declare it, the price is going down. If technology, or if a robot can create it, if a technologist can make it cheaper, if it's subject to Moore's law, if the AI can spit it out, you don't want to store your monetary wealth in anything that human ingenuity or politics creates more of. So that just leaves you with things like Da Vinci paintings. You like scarce art of dead people. You like, you'd prefer beachfront property in Palm Beach over waterfront. It's harder to create beach than it is to create waterfront. And when you look at those things, an acre of land in Miami Beach has gone up a factor of 1,000 in 100 years. Beachfront property in Palm Beach might have gone up 2,000. I mean, these things went from $10,000 an acre to 20 or 30 or 40 million an acre. So the general idea is the currency supply is increasing. There are certain scarce, desirable assets that are not increasing very fast. Bitcoin is hard capped. It's not increasing at all. So why is it going up to 13 million a coin? Well, for the last 10 years, it's been appreciating 60% a year on average. For the past 4 years, 60% a year. Okay, the S&P index is increasing about 15% a year for the past 4 years. The money supply, the dollar, is increasing somewhere between 7 and 10% a year, maybe 10% a year for the past 4 years. So once you understand that, Bitcoin is simpler, more thermodynamically sound than an equity portfolio, right? The thing that's going up a bit faster than the inflation rate is a diversified portfolio of high quality companies like Tesla and Apple and Google and the like. They can maybe outperform a couple of percent due to human ingenuity and robots and AI and Moore's law technology. But companies have attack surfaces. So companies have counterparty risk. The risk factors of companies are they might get sued for antitrust. You know, China doesn't like Nvidia. Europe might tax Apple. A union might unionize Amazon. The US government might sue Microsoft, right? If it's a really good company, it's going to get a regulatory onslaught. And if it's a bad company, it's going to get crushed by a bigger company. And then maybe it just gets unlucky because of a war or famine or a hurricane or bad weather. Or maybe you're located in a city and the tax rate triples. And so there's a parade of horribles that cause you to lose money on a corporate investment or a financial investment. Or maybe you have the best company in the world and it happens to be in Venezuela and the government changes. Or, you know, the people used to have really good companies in Cuba, and then Castro took over. And then all of a sudden it becomes illegal or the currency collapses or they expropriate your property. You have the best oil company in Venezuela and then the government takes it. Okay. Or maybe you have a great company in Russia and the currency collapses like it did in 98. Or maybe you have a great company in Brazil and the currency collapses like it did about 30 years ago. And so things that are in the real world, things that are subject to political fate or weather or war or famine or competition, or maybe you have the world's greatest photo company like Kodak, oops, or Xerox, right? The world's full of examples of really great companies and maybe really great product. Maybe you have great land, maybe you own buildings, but the buildings were in Egypt and there's a coup. Or maybe the buildings were in downtown Afghanistan, you know, in Kabul. Oops. Okay, so what is Bitcoin? Well, it's not in the real world. It's not a company. There's no counterparty risk to a company, no counterparty risk to a culture, no counterparty risk to a currency, no counterparty risk to a creditor, right? You're stripping away counterparty risks. And so when you strip away all the risk, you get pure digital property. Why is it going to go up? It's going to go up because capital is flowing from the more entropic state, from the state of anxiety and risk and confusion toward the more ordered state, a less risky state. Think of water at the top of a mountain. Why does the water flow downhill? Accidental? The waterfall. Scary turbulence? But what if it stops? It's flowing downhill because of physics, because it's a lower energy state for the water to be at sea level than for the water to be 1 mile up. Why is money flowing into Bitcoin? Well, I'm going to take all your money, put it in random countries and random banks in Africa. Maybe I spirit it with a magic spell. And then I say, okay, it's Monday morning. Your money's in random banks and random countries in Africa. Would you like to bring it back to the US or would you like to leave it there? Right? Accidental? No. You're going to bring it back to a place you feel comfortable. Capital flows to security. It flows to where it's treated the best. And so money is flowing, capital. I'm using money as a phrase for long-term capital. It's flowing into Bitcoin because it's running away from Russia and it's running away from China and it's running away from Africa and it's running away from Venezuela and Cuba and it's running away from South America. It's even running away from Europe. If you ask the Europeans, the very simple test, do you prefer the digital dollar or the digital euro? 99-1, they prefer the dollar to the euro. In their own country, they don't want the euro. Everybody wants the dollar. Everybody wants to live in the US. Everybody wants their property in the safe apex network of the world. So the capital is flowing into Bitcoin at 60%. The traditional method of storing your long-term capital is the S&P index is 15%. What's going to happen is that more and more capital is going to flow from the 15% to the 60%. More capital is going to flow from the 20th century to the 21st century. You got $1 billion of warehouses built in 1980. They're rusting, right? They're falling apart. You're going to have to rebuild them. You want to rebuild them for another 40-year run, or you want to put it into Bitcoin, right? So money flows from the past to the future. Money flows from physical to digital. Money flows from high risk to low risk. Money flows from insecure to secure. Money flows from the east to the west. Bitcoin simply represents the highest form, the least disorderly, least risky form of property rights. The 60% will track toward the 15. So over time, the S&P index and Bitcoin will head toward each other. So what do I expect? I think Bitcoin, as it gets bigger, it goes from 60% growth rate to 58 to 55 to 52 to 50 to 48 to 38 to 35 to 33. And the traditional world, the 500, the $150 trillion of traditional equities, that's basically a 15%er or 12 to 15%er. They'll start to incorporate Bitcoin. Maybe they'll start to creep up toward Bitcoin, but they'll also struggle with all the entropic risk and competition and weather and war and famine. So they're always going to struggle. Bitcoin's going to become half the size of equity. It'll start to head up toward the size of equity. And then there's $300 trillion of fixed income, bonds, preferred stocks, all sorts of ETFs that hold fixed income instruments, currency equivalent, sovereign debt. That yields about 5% right now. So 5% before tax, maybe 3 or 4% after tax. So as people get more comfortable with Bitcoin, they're going to move money toward Bitcoin. And then companies like MicroStrategy, well, we're going to create an equity that pulls capital from the equity capital markets, from the Magnificent Seven, from the S&P. It'll flow into MicroStrategy stock. And then we will create bonds, and the bonds will pay you twice as much or 3 times as much as the bonds in the traditional capital market. So as we issue those bonds, the capital that's in fixed income will jump onto a Bitcoin-backed bond, and the equity will jump onto a Bitcoin-backed equity. And over time, you've got $500 trillion of this traditional capital. Think of it as sitting up on that mountaintop, and it wants to go to ground. It wants to go to a simpler, more elegant, less risky, less disordered state, a lower energy state. Water goes from steam. You go from steam to water, and you go from water to ice. And every time you change that phase, enormous amount of energy gets given up. And if you want to go the other way, you have to put energy into it, right? You have to cook the ice to get it to be water. You have to boil the water to get it to be steam. So this is all just economic physics or thermodynamics. And what do I think? I think over 21 years, Bitcoin goes from 60% ARR down to 20% ARR. And if you blend it, it's like an average of 29% ARR. And if you crank 29% ARR into a 21-year model, that takes you from where Bitcoin was, which was about 55,000 a coin in the middle of 2024, when I was at Bitcoin Nashville, and I gave that speech and I gave that forecast. Bitcoin is about 55,000 or 60,000. And it just climbs up with some volatility. It surges up, it crashes down, it surges up, it crashes down, serpentine, and it climbs to 13 million a coin in the year 2045. And as it climbs, it becomes a greater amount of the world's capital. Instead of being $2 trillion, it becomes $280 trillion. But the amount of wealth in the world goes from 900 trillion to 4,000 trillion. And there's a lot of bonds, and there's a lot of real estate, and there's a lot of equity. And it's not like Bitcoin eats everything. It's just like Bitcoin goes from being 1/10 of 1% of the world's wealth, to being 7% of the world's wealth or something like that, And for people that want to play with that, if you Google Bitcoin 24, you'll find the model on GitHub. You can go download the model. You can crank in your assumptions about inflation and innovation rates and all the monetization and demonetization of the asset classes, and And you'll come to your own, you know, bull case and bear case and base case where Bitcoin is headed. But, you know, at the end of the day, the big idea is half the money in the world is just long-term capital. People just want to preserve their wealth. I mean, it's the greatest use case in the world is just wealth preservation. I just want to take my money and I want to put it in a savings account in cyberspace. I want a bank in cyberspace that won't rip me off. And I want to buy an asset that no entrepreneur can make more of, no AI can make more of, no politician can make more of. I want to know I'm buying 1/21 millionth of all of the money in the bank for the next 1,000 years. And I don't want a management that can kind of freeze my assets, steal my money, debase the currency. And so Bitcoin is that very simple idea. And that I think is my elaborate explanation for why I think it's going to 13 million a coin, you know, with plus or minus, you know, that was my base case.
Exactly. And so to put a cap on this, just for clarity, that based on your assumptions, that was your base case, meaning there's a bull case over 13 million. And
Yeah.
what was the bear case? Like at
I
least
think like the range was from 3 million to 49 million.
right.
I mean, like it's going to millions a coin and it could be tens of millions a coin, right?
hmm And we're speaking on the future, obviously, because that's what we all care about as Bitcoin
Right.
believers. But, you know, I remember when you first publicly announced you were into Bitcoin, Bitcoin's
Mm.
price was around $10,000 per coin. So that's at least a 10x. So, you know, my question for you, you know, you faced a lot of detractors. My question to you is, do you have a message for your haters now that Bitcoin has cleared 100K?
Um, Bitcoin wants you back. It's never too late to embrace Bitcoin. You know, I was a hater when Bitcoin was $100 a coin, you know, and you know, some people get on board at $10 a coin, some at 100, some at 1,000, some at 10,000. It's not too late. It's still pretty early. I mean, it's a 99% discount, you know, to 10 million a coin. You're still going to get 100x if you join now. It's like the guy saying, "Damn, it's 1750, and I didn't buy Manhattan real estate 100 years ago, and now it's going to cost me more." It's like everybody's saying that. They're always thinking it's too late. It's not too late. I mean, you're still at the point where just 1-2% of the population of the world really understands what's going on. I think we're like getting into the third inning.
Okay. How in like 50 to 60 million Americans own Bitcoin, according to some research. Yet there are so many people in the world who don't own any Bitcoin. Today you can get 0.01 Bitcoin for $1,000. It used to be cheaper. How important is it for somebody to get off zero and accumulate that first 0.01?
Well, I think everybody that has a long-term capital plan, if you have a portfolio of assets or if you have money that you don't need for 4 years, I think the reasonable thing to do is you want to have some portion of it in digital property, in digital capital. That's Bitcoin. And I think 1%, 2% is like an insurance policy. I mean, it's like it's not gonna you're buying an insurance policy so you won't be totally wrecked. 10, 20, 30% would be like a nice allocation, right? If you had a third of your assets in Magnificent Seven stocks or high quality companies, and if you had 20 or 30% in real estate or some kind of high quality collectibles, you want to figure out what do you want to give to your grandkids? What do you want to retire on? Something scarce, desirable that you want to hold, that you think that someone wealthier than you, more sophisticated than you might want to buy from you 10, 20, 30, 40 years from now. If you think about it like that, then I think Bitcoin definitely ought to be part of that portfolio. I mean, everybody's got to decide what percentage of their portfolio. But at this point, we've moved past the point where you would be thinking that the government's going to ban it or take away from you. You're just buying digital property.
So would you say there's almost nothing more important if you have zero Bitcoin than getting off zero and getting that first 0.01?
Look, if you're a mega billionaire, if you're Warren Buffett, I guess it's not really that important to him. But I think if you're middle class, like, if you like money, if you want money, there's nothing more important. It's the future of money. Money, me defining money as long-term store of value. You know, I mean, you're not going to get rich by holding currencies in your pocket. You ought to minimize the amount of currency you hold. But if you want to get rich, the time-tested way to get rich is levered long property. You buy scarce, desirable property, and that will preserve your wealth. The way you preserve your wealth is you buy scarce, desirable property. The way you get wealth, the way you create wealth, is you borrow the money from the bank to buy the property. So rich families, it's like, I'm going to buy $1 billion of real estate, but I don't have the billion. So I managed to figure out how to borrow 900 million. And then I went and I raised another 70 million in equity, and I got a 30% promote. And I ended up, when the dust settled, with 30% of $10 billion worth of real estate. And I made $3 billion because, you know, I got highly levered. So I think finding a way to get scarce, desirable property and lever into it is how you get rich. If you want to stay rich, then you want to buy something that's going to appreciate faster than the monetary inflation rate after taxes. And that means that's why you can't store capital in bonds, because no bonds will give you more than the inflation rate after taxes. That means that your best bet is, you know, you pick the next NVIDIA, but, you know, good luck, right? It's like you got to pick one out of 500. Maybe you grab a, you know, portfolio of Mag 7 stocks and maybe you can beat. But otherwise, if you're not going to do that, then Bitcoin is the best idea. Look, I think Bitcoin is plus 60% a year for the past 4 years. The S&P is plus 5%. The Mag 7 is like plus 25 to 30%. You know, this is not complicated rocket science. The monetary inflation rate, it feels like it's 10% to me. So, you know, should you, if you don't care about money, then I guess it doesn't matter. But if you care about money, if you want more, or you want to keep the money you have, the hurdle rate, you know, for practical purposes is 10%. And, you know, the conventional approach is you buy S&P 500 index and you beat it by a little bit. And then you know, real estate's not that good, because with real estate, you're probably growing less than the 15% and you're getting property tax. And the property tax is a killer for you over time.
Michael Saylor, Bitcoin's either going to 0 or 1 million. What if you're wrong about the million? What could go wrong in general that takes it to 0 realistically?
I guess space aliens come down with the, you know, space alien cyber virus, and they hate the human race, and they decide that the best thing in the human race is Bitcoin, and they try to kill it. I rather think that they'll probably just zap us all, you know, before they bother to kill Bitcoin. Some extinction level event, you know, like this. You're on a ship. What could go wrong with your family? Oh, the ship could sink, I guess, rapidly. I mean, the Titanic level, extinction level event. You know, an asteroid could hit the Earth. I mean, that's what took out the dinosaurs. So, I mean, I would acknowledge that you could have an existential threat or extinction level event. But that's the case with everything that you can possibly own. I mean, that's an argument for not crossing the street. That's an argument for not putting food in your mouth. That's an argument for not drinking. And that's an argument for not owning anything. You know, it might poison you, or it might collapse to zero. But beyond that, I think most of the turbulence in the future is just political volatility. It's like, oh, the Chinese are going to block it. Oh, that's bad. Oh, the Chinese are going to embrace it. That's bad. Oh, the Chinese didn't block it. That's bad. Oh, the Chinese, you know, it's like people speculating about what the Chinese will do, what the Russians will do, you know, what the government will do. And that causes, you know, they're going to raise the interest rates. That's bad. They're going to lower the interest rates. That's bad. It'll be, the entire asset is very exposed to macroeconomic volatility. I think it's a feature. I think it's what makes it the greatest asset in the world. But there are a lot of people that don't like volatility, and they would just like everything to be smooth and calm and easy. They're always going to perceive it as a little bit scary. I think that we're beyond we're beyond the point where it's going to fail. It didn't fail. It succeeded. Is it going to be banned? No. Right. The big three is, will it be hacked? Will it be banned? Will it be copied? And the answer is, it hasn't been hacked. It isn't getting banned. It has been copied, but it's winning. It's the best copy, right? It was a copy of other stuff that came before it. It was a bit better. And other people have copied it, but the copies have been deemed a bit worse. The smart money in the world has decided this is the winner. You know, it's like the economic protocol for prosperity. Why do you speak English? Because it's the language protocol for prosperity, you know? Why do you use base 10 math? Why do you use Zoom right now, right? Why do you use the internet, right? Theoretically, the internet could stop, Zoom could stop, I could change to Chinese. I could, theoretically, but the point is, it's the protocol chosen by all the people on the planet to go about their business. They didn't have to choose English. It could have been French. That might have been decided at Waterloo or a bit before that, right? Could have been Latin. Didn't work out that way, right? It works out to be English. So I think at this point, if you think of it as a protocol, it's like, well, what if people stop using 10 and 9 and the number 8? What if they start using base 16? It's like, well, I'm building my computer programs on base 10, but what if they switch to Swahili and use base 32? Because I read somewhere it's better. It's like, yeah, well, maybe, but right now the entire world thinks this one is better, and we'll use this one because all the smart rich people use this one. And when all the smart rich people decide to move to a different protocol, at least I'll be rich and I can move my money to the new protocol with them, right? And so that's why Bitcoin is winning. That's why it makes sense to be invested in it.
So Google's Willow and quantum computing. I know it's not ready yet, but let's say in 15 years, when quantum computing goes into full effect, what will happen to Bitcoin?
You know, the entire Willow thing is a successful marketing stunt, but they created a quantum benchmark that has no practical use. And then they showed that their quantum computer with no practical use is really good at the benchmark that they created, right? So if it had a practical use, they would have turned it on to mine Bitcoin and they would be making $50 million a day. But they're not. So I guess they could use it for a lot of things. It is a proof of concept that they can create something which may or may not be useful sometime in the future. And in the history of science, there are proof of concepts, and sometimes they're 5 years before they work, and sometimes they're 50 years. We had Google Glass. You remember when we finally commercialized that? That started like 2012 or 2013, and here we are, and 12 years later, and no Google Glass. So nobody knows when we will have a powerful enough computer to crack modern day encryption. But when we do it, it will be a problem for everybody, including Google. It crashes their own stock, guys. It crashes Microsoft and Google and Meta and Apple and everything in the S&P, and all the Magnificent Seven, and all the robots and all the drones fall out of the sky, and the banking system fails, and the governments of the world fail when someone does that. And what's the answer? Intelligent computer scientists will upgrade all the encryption in order to be quantum resistant or whatever. There's going to be a continual upgrade to encryption technology and defense technology to address the threats as they form. Bitcoin's just software, right? As I said, it's a protocol. It's like, what do you expect your bank to do when it's no longer secure? You expect the bank to upgrade the software. What do you think all the smart people with the money in the world are going to do when someone invents a computer that might threaten their money? They're going to upgrade the software and upgrade the hardware to defeat the threat. So it's not like anything. It's not unlike every other issue in the world. What happens when you don't have a word for this in the English language. So I heard everybody switching to Russian because you don't have a word in the English language to deal with the quantum threat. And my answer is, when it's really a threat, we'll invent the word and we'll stick with English, right? So the protocols evolve life is going to move forward. Smart people, when they're under threat, are just going to upgrade their defenses. And that's what I expect with Bitcoin, just like I expect it with everything else you use in your life that requires encryption of any sort.
Let's pivot a little bit and actually zoom out. I don't want to talk about an existential threat, but let's talk about Wall Street now getting involved in Bitcoin and crypto. And here's the thing, Michael, don't even try and deny it. Wall Street is known to manipulate markets. When they get long, they get loud. When they want a better price, they start propagating uncertainty. Now that Wall Street is in, and they're increasingly getting more in, do you think Bitcoin's price is being manipulated by big Wall Street whales?
I think when the price moves in random directions on Saturday night or Sunday morning or during the day, and when it moves in the opposite direction of the way that it ought to naturally move, I think there's someone with a lot of capital that's either panicked and they're doing something that I deem to be stupid or foolish, or I think there's someone with a lot of capital that has a different agenda than the rest of us, and we don't understand it, and that creates volatility. I don't think it's just Wall Street. I mean, the truth is, Bitcoin's just a free market. It's the freest market in capital in the world. And the definition of free market is anybody can manipulate it any way they want until they run out of money. So if you have $100 billion of Bitcoin and on Saturday night you want to sell all $100 billion of Bitcoin all the way down to 1 penny, maybe you can do it. And maybe you have an agenda to do it. I'll probably be buying it when it gets down to the 1 penny, maybe when it gets to the $1. I mean, if you want to call it manipulation, you can, but I wouldn't refer it to manipulation as much as enable. It's enabling you to do it, right? Bitcoin's volatile. It's always going to be more volatile than the S&P. The S&P's vol 15 and Bitcoin's vol 60. It's always more volatile, but the reason it's more volatile is because if you had $1 billion and you were in Japan on Saturday night and you just had a panic attack and decided the world's going to plunge into chaos, and if you wanted to take a $10 billion or a $100 billion short position on the economy, the only way you could do it was Bitcoin. But Bitcoin would give you not just the ability to short the market, it would give you the ability to short the market in 1 minute. It would give you the ability to short the market with 100x leverage or 50x leverage or 20x leverage. Okay. The truth is on Wall Street, normally you can't even short more than 2x. Like it's very difficult for people to get extreme leverage. I guess in the CME market, they get a bit more leverage in the future. So there they can bring more leverage. But I mean, Bitcoin is really providing everybody in the world with the greatest degree of liquidity and leverage and credit. And maybe you're a fool to short it, but maybe you're a fool to go long the other way. But the point is, that's what makes markets. Everybody's got their opinion, and you might think that you know better, but if somebody wants to panic sell $1 billion of Bitcoin on Saturday night because they heard that missiles got launched because they saw it on X from a stupid troll account, your position is either you're not allowed to do it, I'm going to censor the transaction because you're just not allowed, and I'm the God King of capital markets. Or your position is you're free to do what you want. I think it's stupid of you. There's a phrase, a fool and his money are soon parted. If you're stupid enough to sell $1 billion based on a troll account because you saw a meme and there was no missile strike, or maybe there was, but it didn't matter, you're just going to lose the money. You won't have the money. And so the market gets smarter. And what I would say about all this volatility and all this trading is the very intelligent capitalists that make the right trades are getting richer and more powerful and more influential. And the really stupid capitalists that make the wrong trades are getting poorer and they're getting less powerful, right? And they're becoming irrelevant. And the marketplace is much more complicated than you or I or any regulator or anybody on the face of the earth. And the real beauty, the insane beauty of the Bitcoin network is it is the world's greatest free market, maybe the greatest free market of anything. I mean, I wonder, is there any product in the world that is traded globally 24/7, 365 in multi-billion dollar components where everything is connected to everything all the time? I mean, I don't, you can't short Manhattan real estate. You can't short gold. You can't trade iPhones. Like you can't panic sell 1 billion iPhones on Saturday night because you think Apple's going under, and you can't, roaring kitty buy 10 million iPhones on Sunday morning. And so I don't know that there's another free market to buy and sell things with or without leverage at any point anywhere that's greater than Bitcoin. So I just think Wall Street is just one of the actors, but if they do stupid stuff, if they like manipulate, see, the thing is you can manipulate the price of a stock at 4 p.m. in the evening and knowing that no one's going to touch it until 9:30 the next day. You can't really do that with Bitcoin because if you manipulate the price of the stock at 4 p.m., it's going to trade another 6 hours. So if you manipulated it down, you would be the loser because people would be buying it cheap, in Japan and China and Europe while you're asleep. And then you're going to wake up and you're going to find that you're naked short and you've lost your shirt. So I think this is a game for adults. And, maybe they short it and they buy it back. And maybe you don't like the fact that they shorted 1 billion in the morning and bought back 1 billion in the afternoon. But a free market person would say, hey, they created liquidity. And because they created liquidity, it trades 10x as much as it would otherwise trade. And because it trades 10x as much, that means that you can actually extract $1 billion in 5 minutes instead of $1 billion in 5 months. Right? It's like, you ever see a gyroscope? I'm spinning the gyroscope really fast, and you're like, well, wait a minute, it's not going anywhere. What's the point of spinning a gyro really fast if it doesn't move? I mean, because the answer is stability, right? It creates enormous stability. We use it in inertial navigation systems. And so all of this stuff going on in the market, which could be characterized by a hater or a skeptic as manipulation, it's capitalist trading with an agenda that's different than yours or mine based on their local knowledge. And they're creating liquidity. They're compressing the spread. They're creating credit. They're creating stability. They're actually diminishing the volatility because they're going to short it at the top. They're going to cover their short at the bottom. They're creating a stable framework, and the inertial navigation systems matter. The gyros matter, right? All of these things have a physical value, right, in the economy. And I think anybody in business or anybody that studied life much, they realize that in a city or in an economy where lots of actors are able to go about their business doing things that you don't understand, that you wouldn't do, normally that maximizes productivity and quality of life, right? And if we only agree to do the things that you think make sense, well, every idea that you never thought of is never coming to you. And the truth of the matter is, you'd probably be dead because there's probably 99,000 things that get done in this society that you can't do, that you wouldn't even think to start doing, that are going to save your life one day. And so I just think let the free markets market. That's what they're meant to do. That's what makes the entire world work. That's what lifts humanity out of the gutter.
Michael, you were once very vocal that Ethereum, in your opinion, would be declared an unregistered security. Then it became an ETF. What did you get wrong, or what information changed?
I think the political landscape and consensus really shifted in the second quarter when Trump embraced crypto. The crypto community, I think, was at the end of their rope, where it was pretty clear the current administration was going to continue to wage a war on crypto via enforcement actions. And they had nothing to lose by abandoning, the Democratic Party, and they made that decision. And then I think there was a atmosphere of lawfare that caused, Trump to decide he would be benefited to ally with the crypto community. And so that alliance formed and got progressively stronger. And I think that changed the political landscape, not just in the US, but it changed it in the world, actually. It changed the course of human history. I think it changed the outcome of the election, right? I think the crypto community support actually was a material force that tipped the election, in favor of the red sweep. And I think we got a red sweep in part because of the support of the digital assets community. So I think that there were really two possible futures, two timelines in March or February of the year, and one timeline, the blue timeline, is Bitcoin motors up as the one crypto asset that's embraced as a commodity by the global community, and then everything else sits, in a gray zone, right? And in a world of uncertainty. And I think the second timeline, the red timeline, is the war on crypto ends. We get a supportive administration, House and Senate. We get a digital assets framework. We get a framework. There's three things we need in a framework. We need a taxonomy. We need legitimacy, and we need proportionality. And a taxonomy means give me a physical, ethical definition of a digital commodity, a digital security, a digital token, a digital currency, an NFT, and a digital asset-backed token, an ABT. We need those things defined. And the second thing we need, legitimacy. We need the rights and responsibilities of an issuer, an exchange, and a holder, an owner, right? If you're a digital exchange, what can you trade? What are your responsibilities, right? Obviously, something grounded in the do not lie, cheat, and steal area. But it goes beyond it. Like, do you have a right to self-custody of your digital securities? Can you custody Apple stock on your iPhone? Can you custody your Apple stock on your Android phone if it's tokenized, right? Can you take your Apple stock out of the country? How do I issue a digital commodity? How do I issue a token? What's the difference between a security and a token? Maybe a token is utility in cyberspace, and a security gives you a right to cash flows in physical space, or it gives you a right to physical property, right? Define a digital currency, a token pegged one for one to a fiat currency backed by currency equivalents. Okay, great. Right, so you can see the taxonomy, you can see the legitimacy, and then you get to this issue of proportionality. It costs right now $10 million a year in compliance fees to actually issue a public security. If you want to raise $1 million once, how do you afford to pay $10 million a year for the insurance policy? How do I raise $100,000 when it costs me $40 million to go public, right? So logic says it shouldn't cost more than 10 basis points a year to issue a security or a token or something. If I have $1 million thing, then certainly when it costs me 1% of the thing, when it costs me $10,000 a year, that's getting expensive to issue it. But it may be $1,000, I could maybe handle a $1 million thing. So I think that those ideas, the digital assets framework, the idea of proportionality, legitimacy, taxonomy, that was not going anywhere in a split Congress, in a blue-red Congress, and that caused me to be fairly pessimistic at the beginning of the year. I would have thought Bitcoin's going to grind up to 20 to 40% a year. And then everything else is just fighting a headwind, and we don't know, but it's just going to be a continual simmering, struggle. Brutal, painful struggle. But then I think things shifted in the second quarter, and then in the third quarter, and then things shifted more. And then November 5th, everything flipped to the triple red timeline. And now I think the outlook that's most reasonable is Bitcoin surges up. I mean, we saw it went from 68,000 through 100,000. Bitcoin's not growing 20 to 40% a year. It's growing like plus 20, 40 to 60% or more. Bitcoin surges. And then all the other digital assets, they have a new lease on life. At least there's an expectation of a regulatory framework coming. I can't tell you exactly, what happens next because I haven't seen the framework, right? And that has to be determined in dialogue between the White House and the cabinet and the House and the Senate and the industry. But I'm optimistic, right? And now I would say, my forecast for Bitcoin isn't that different. It's going to grow 29% ARR over 21 years to be a $280 trillion asset class and 13 million a coin. That's not that different. Maybe a little bit faster up front. Maybe I'm leaning more toward the base case to the bull case than I was leaning from the base case toward the bear case. So yeah, I'm a bit more optimistic. But I think the big major sea change is you can see $500 trillion of conventional assets getting tokenized to become digital assets. I think the issue is, why wouldn't half of the equity in the world become digital equity? Like, why wouldn't you expect to see Apple stock, Google, Amazon stock trading on your iPhone and your Android phone as tokenized security? And I would think that the path is open for stablecoin, that to go from $150 billion to $1 trillion to $10 trillion. I mean, I at this point, you define a digital currency, you peg it to the dollar, to dollar equivalents. Yeah, there ought to be a regulatory environment where a company or a bank, especially in the US, can issue a US dollar-backed stablecoin. I think there's $10 trillion of demand for that. I think that we're going to go from $100 billion to a $10 trillion industry in stablecoins. We're just waiting for the framework for the digital currency. And as you know, I don't think of Bitcoin as digital currency. I think Bitcoin is digital capital. Currency is the short-term medium of exchange pegged to the fiat currency. Capital is the long-term store of value competing with real estate and gold and high quality equity and your art, that you're going to give to your grandchildren. I think those two are clear. I think the exciting thing, right, is defining a digital token, right? How about a token in cyberspace that has utility in cyberspace? It's not a security. It doesn't have a claim on real property or on cash flows, but rather it's Tom Brady gives a digital token and it gives super fans rights to chat with Tom Brady online, right? 10 million people want to comment on Tom Brady's post, but the top 100 super fans, they get elevated to the top. They get into the chat. They get into the 100-person Zoom meeting. They get something, whatever it might be, some prioritization. I don't know why there wouldn't be a million of those different types of tokens issued, right? I mean, the great travesty of the traditional world is 0.06% of the businesses in the US can tap the capital markets. It shouldn't cost 40 million up front and 10 million a year to go public. If you're Joe Rogan or Lex Friedman or Katy Perry or Tom Brady or a $27 million restaurant chain or $1 million a year chain of yoga salons or something, or an influencer or your podcast, why can't you guys all tap the capital markets? And if I tell you it's going to cost you 40 million up front, you're not doing it. But if I said, the upfront fees will be no more than 1%, 100 basis points, and then on a continuing basis is 10 basis points of the amount of money you raise or the amount of money that you have in the capital market, you might think, I can afford to have a 10% cost in order to comply with the laws. And there's 400 million businesses. There's only 4,000 publicly traded companies in the US. If you read Murray Rothbard in the history of money and banking in the United States, he gets to the point where he talks about the creation of the SEC 33 Act. And he says, yeah, it was a power grab by Washington, D.C. in conjunction with the Rockefeller interest to cut out the J.P. Morgan interest in order to create a cartel to limit access to the capital markets to just a set of very large companies that were wired in D.C. We think that's new. That's what he wrote 30 years ago before crypto even came into being. And that's what people thought in the early 30s. And so the point of this really is everybody's been beaten to submission to think that being a public company or raising capital in the public markets isn't for them. You know, it's like, these are not the droids you're looking for. This is not for you, right? You've got the Stockholm syndrome. You're too small. You don't deserve it. You're just a musician. You're just an artist. You're just a podcaster. You're just a restaurant. You're just a single one city real estate developer. This is not for you. This is only, you know, only megacorps with billions of dollars of assets can go public. Well, I think what the crypto community showed is you can spin up a token and, you know, for $40 in 4 hours. And if you can do something a million times faster, a million times cheaper, a million times better, then don't you think if we want the civilization to move forward, we ought to establish an ethical framework? What I would say the government's role is to create an ethical framework. I mean, clear, legitimate rights and responsibilities and a taxonomy. Here's your 6 things you can do. You know, if you want to sell a token backed by a bar of gold, well, then you damn well better keep a bar of gold for each token. You got to be audited, you know, once a quarter by an auditor, and you got to publish the audit results to sell tokens backed by gold, right? I mean, something very straightforward. Tell people how to do it. Tell people what the ethical, you know, definition of the thing is. I don't think the government should tell you technically how to do it. And I don't think they should dictate economically, you know, should it be a bar of gold, or it should be a token of a gold coin, or it should be a token of a Spanish doubloon coin. I don't think the government should meddle in how you do it economically. I think, though, for this industry to thrive, the government's got to give you the minimal of rules and then get out of the way. And what happens next is, I think, millions and millions of digital assets will be created. I think that'll bring the exchanges to life. That'll create a renaissance in the wallets. That'll create a renaissance in all the applications. Don't get me wrong. I'm sure lots of people will do stupid things and they'll, you know, and they'll crash and burn. 99% of the companies that start fail, and 99% of the, you know, whatever public companies have a hard time competing against the Magnificent Seven. Just like 99% of businesses eventually get shut down. But you know what? What percentage of the people die over 100 years? Like 99%? It's like, we shouldn't stop people from living just because over 100-year time frame, you know, there's a high mortality rate for whatever. So I would say what's really interesting here is we jolted from a very regressive, a very depressing timeline to a very progressive, very inspirational, pro-technology, pro-prosperity timeline. And it all happened in 2024 as we were talking.
Aaron, I know you had a final question.
No, I think Michael Saylor answered it. So you can give him final thoughts or whatever you want to do.
Michael, thank you so much for joining us. Final thoughts and just any advice for people entering Bitcoin today.
You know, my advice for people is Bitcoin's digital capital. It's, you know, in 100,000 years, we finally came up with perfect money. Every economist that ever wrote on the topic for, you know, thousands of years, they never had it. Satoshi created it, brought it to life, January 3rd, 2009. It took us 15 years to figure out whether it was going to work. Now it looks like it's working. You will work 100,000 hours in your life as a student and as a laborer to make money. Given the fact that you're looking at 50 years of hard labor as a student and as a laborer, and given 2,000 hours a year and 100,000 hours, I would say a rational thing to do is invest 100 hours to figure out how to keep your money. Right? You're going to invest 100,000 hours in making it, spend 100 hours figuring out how to keep it. If you don't understand what Bitcoin is, if you don't understand why it's better than seashells or buying NASDAQ stocks, or why it's better than investing in bonds or currencies or real estate or random artwork, if you don't get it, if you're afraid of it, don't put your money in it because I say you should. put 100 hours into it, you know? You put 100,000 hours and, trying to actually make money, and you'll probably die poor or die without any if you don't ever figure out money, because the system is constructed to take all your money away from you unless you get really smart about economics. So what I ask for people is, put the time in, spend 100 hours. I mean, you probably spent that much trying to figure out how to pitch a baseball or drive an automobile, right? I mean, nothing done or nothing meaningful is achieved in life without a 4-year commitment, a 1-year commitment, a 100-hour commitment. And so I'm not telling you how to live the rest of your life. I'm just saying that the part of your life which needs money, that's worth 100 hours. So look at it. You can go to hope.com. You can go on Twitter. You can just go start Googling stuff. You can go on YouTube and then come to your own decision. And maybe you'll come up with a better idea. But, Bitcoin is the idea that $2 trillion worth of smart money capital has decided upon after a vigorous, bitter debate for 15 years. 15 years of a lot of very smart people going back and forth through the block size wars, going through the crazy years of the last 4 years. A lot of people, are just like you. I mean, what's the human condition? We want money. We want to keep the money. We don't want someone to take the money away from us. Bitcoin is just a crypto network for people that would like to keep their money, right? Preserve their capital. As for everything else, I have no learned opinion on everything else. There's 100,000 pieces of art you might buy, 100,000 companies you could invest in, 100,000 business opportunities for you to consider, 100,000 pieces of real estate that you might invest in. There are other experts on that. Perhaps you're the expert. If you're the expert, you're the expert, you should do your thing. If you're the world's greatest podcaster, you should do your thing. If you're a musician, do your thing. If you're a football player, do your thing. That's all great. The thing that Satoshi created was a way for you to keep your money. The more people that learn about it, the more of us get to keep our money. And every single time an intelligent person joins the network, they make the network that much more secure, that much more powerful. They de-risk it for everybody else, right? And so join the team. It's a good team. Our objectives are to make you live, happily forever after, and hopefully make you wealthy enough that your kids are wealthy. That's the goal, right? And you can help it. All you got to do is figure it out, join the network. Once you've joined the network, contribute to the network. How do you do that? Buy the Bitcoin. That's the number one way. Like, don't talk about it, buy it. But then after that, yeah, you can educate people on it. You can secure it. You can run a node. You can create it, a Bitcoin application. You can capitalize your company on Bitcoin. You can move your state, your city, your government, your institution, your family to Bitcoin. Those are all things, but don't do it for them. Don't even do it for me. Do it for yourself. And if you have a better idea, then that's okay. You do your better thing. None of my business. Thank you for your time.